Also, I'm going to just be recording this meeting for all of you, so you know that it will be available on our website afterwards. Okay. So let's just go ahead and get started. So how we're going to do this presentation is myself, AgrAbility, is going to present a couple slides, and then my co-worker at Easter Seals of Wisconsin, Amy Cooper, is also going to be presenting some stuff, and then that will just be a brief amount of time, and then from there we'll hand it over to Tom Brandt at FSA, who will be the main presenter. So if you're not super familiar with AgrAbility Wisconsin, we've been around since 1991, promoting success in agriculture for farmers and their farm families, living with a farm injury, disability, or limitation. And as I kind of said before, we're partnered with Easter Seals of Wisconsin and the University of Wisconsin Extension. We've been able to help over 2,900 farmers since 1991, which making a significant impact on Wisconsin agriculture. So as you can see from this chart, it just kind of gives you a deeper dive as to how AgrAbility works. We're a grant-funded program through USDA, and as I said, we have multiple partners. So we have UW Extension, and then within that, our department is Biological Systems Engineering. That's where I fit in, doing grant writing, public education outreach, and making sure we get all of our clients enrolled into the program. And on the other side of it, we have Easter Seals of Wisconsin. Their farm program has many caseworkers and rehab specialists on it. And after I make sure we get everyone enrolled, they take over the direct client services. So just our staff, you can see my photo there on the right-hand side of your screen. And then also Dr. Brian Luck and Dr. Richard Straub are co-directors in the AgrAbility program. So you might see their names out and hear them speaking on radio programs or quotes in newspaper articles as well. And then we have our Easter Seal staff. So as I said, there are quite a few more of them than us, but we all work together really well for AgrAbility. Just a couple numbers you can see from our last grant year. We were able to help 361 total active clients and 54 new clients last year. This year, we're already surpassing some of those numbers, especially in the new clients, which is great to see. How the program works, I just want to give you an update if you're not familiar, is AgrAbility potential clients hear about us through newspaper, social media, events, neighbors, family members, etc. Since we're a grant-funded based program, we're not able to reach out to anyone directly. They have to get in touch with us first through phone or email. But the process is really simple once they do get in contact with us by calling our office or going to our website to enroll. It takes 5 to 10 minutes to share your basic information with me, such as name, phone, address, and provide your farm information, like what type of farm you have, if you're working on it full-time, and then also sharing your disability or mobility issues. No need to provide any medical records at that time. So all very basic information to get you enrolled into the program. And once that happens, you're then set up with a farm assessment and rehabilitation methods rural rehab specialist from Easter Seals, and they get in contact with you via phone and to set up farm visits. All right. And now I'm going to unmute Amy Cooper from Easter Seals of Wisconsin, and she's going to kind of walk us through their part in AgrAbility.
Thanks, Amanda. Hi, everyone. Thank you again for joining us. As Amanda said, I'm a farm rural rehabilitation specialist for Easter Seals Farm Program, kind of covering the southern part of the state with my colleague Jeff, who covers the northern side. And so kind of just wanted to go through kind of what we do on a visit. Being prepared for the conditions, you know, we go out on visits whether it's raining or not. So just making sure that we're prepared for that, and making sure the consumer is comfortable with that. Understanding the culture, knowing that farmers can be very private and very proud of what they do, but also you know, farming isn't easy, so there's a lot of pressure and stress within farming and the industry. So just, you know, doing our part in listening, being as honest as possible with what may or may not be able to happen, or we can and cannot help with, things like that. Taking time to ask questions, but also, again, just listening, being there to kind of help us establish a rapport with our consumers. We gather information on farm background, financials, others involved on the farm, you know, if they have family that's helping out, and then clarifying the disability information that they've shared with our other colleagues. And then while we're at the farm, we tour the farm, talk about work tasks that they do, including those that are difficult, and then talking about possible solutions that might be out there. So what is assistive technology? It's adaptive changes for people with disabilities. So this typically includes devices or equipment that addresses the limitations. It may include just adjusting methods to accomplish a task as well. It can be low tech or high tech, expensive or inexpensive. So with the use of assistive technology, a person with a disability can maintain their independence and productive lifestyle on the farm, which is really our ultimate goal to help them be able to do. So again, kind of going back to the visit, we generally identify the general problem area. We ask ourselves, is there a rehab intervention that could improve the function? Can the task be reassigned? Is that an option? Once the specific problem is identified and AT is required, then we consider if there's a commercially available item off the shelf or designed for that specific purpose that would accommodate the problem, or is there a commercially available item designed to complete a different or something else but would also accommodate the area that we're looking at. Could we modify a product? Is it cost efficient to do that? Is there a liability question with doing that? We ask ourselves those questions. Or can we maybe look at fabricating a new product or something else for them? So just some examples of assistive technology that we talk about fairly frequently. Some simple things we'll talk about, some a little higher tech, a little more expensive, some lower cost stuff here. So extra step and handrails are a huge thing we talk about. Just getting up and down tractors, you know, when you're in and out of the tractor frequently, especially during fieldwork season, having just that extra step lower to the ground can be important for a lot of people. Hand controls is another thing that we talk about quite frequently. If you're not able to use your feet to control either the clutch or the gas or the brakes for the tractors or vehicles you're using around the farm, we talk about hand controls and options to be able to drive. Another big one that we talk about quite a bit is the AgrSpeed automatic hitch. So this allows you to hitch and unhitch without leaving the tractor. It is PTO compatible and compatible with choppers, and it just overall increases efficiency. Again, not having to leave the seat of the tractor or the truck or whatever you're using to move wagons or whatever the case may be. We talk about extra handles. These can be used on shovels, forks, pretty much anything that would require you to kind of have to bend with your back, or just extra support for that extra handle, having it there. Extended mirrors is something that we talk about to decrease having to look back behind you or twist and turn in the seat. We also talk a lot about camera systems available to help with that as well. High back seats with air suspensions or just a suspension in general. Some seats don't have much of a suspension anymore just because they're so old. So we do talk about either repairing the suspension on the seat, whether it's mechanical or replacing it with an air suspension. Whatever the case may be, just making sure that the person's able to be comfortable while driving over rough terrain in the field. So talking about mobility, the Freedom Chair is something that is an option for persons wheelchair bound, just allowing them to get outside and move more areas than they would be able to maybe with their wheelchair, and also keep their wheelchair wheels clean. As you can see, you just kind of go up into the Freedom Chair and can drive from there. We also talk a lot about the Track Chair. Now, this that you see in the picture is a model that can go into a standing position, which gives a little more flexibility and freedom than just being able to sit and get around. So something that's able to, if you're an avid hunter or something you can take into the woods or just even get around outside when it's muddy, those tracks, they allow you to do that and be more independent. So there's our contact information. So if you ever have any questions or want to talk to Amanda about services, feel free to contact us. Contact Amanda, contact any of us at any time.
Yeah, thank you so much, Amy, for speaking and sharing some of that information. Yes, you can contact us at any time. Right now, we're not currently working in office, but we will get back to you if you give us a call or if you email us within the next day. And if you're looking to enroll in AgrAbility and you have your computer and you want to go online, we do have a form on our website you can fill out to enroll as well. So that's something to look at. Also, just so you know, this presentation is being recorded and it will be posted on our website, and then we'll share that link out on social media and also in our next June newsletter. So you will be able to find this information again if needed. And so next up, I'm introducing Tom Brandt. He's the Chief of Farm Loan Programs at the Farm Service Agency in Wisconsin. And FSA is an agency of the USDA. They administer various farm programs and they're authorized by the Farm Bill and provide family farmers access to credit through direct and guaranteed loans. As you can see, Tom was raised on a dairy farm in Sauk County, and he's been with FSA for over 30 years. So with that, I will stop sharing my screen and allow Tom to share his, and we'll move on with his presentation.
All right. Well, thanks, Amanda. Um, I just got to find out which screen I'm sharing here because I have actually three of them. So I'm trying to make sure I select the right one. Okay. Can you see the presentation there? Can you verify that?
Yep, I can see the presentation, Tom.
Okay. And is it full size now?
You're in presentation mode, so you just need to change your display settings, I think, to duplicate slideshow. There we go.
How's that?
Perfect.
All righty. Well, um, thanks for having me. I just wanted to give you some ideas of the different opportunities that are available with FSA to provide financing for our farmers out there. I did want to put in one plug here for AgrAbility. I had a former customer that I recall had a bad back, and he was able to get a different seat put on his tractor that helped him quite a bit so that he could, like you mentioned, go over, do some of that field work, running over the rough fields and everything and make it a little bit more comfortable for him there. So as Amanda mentioned, FSA is part of USDA. On the one side of the office, we implement all of the programs that are put into place by the Farm Bill. So the one that just started this week has to do with the coronavirus program, but providing some assistance for the farmers out there to help them recover from some of the losses due to the pandemic that's out there. And then there's annual programs, the egg risk protection program and the milk dairy margin program. So all kinds of different ones, CRP for conservation. And then on the other side of the office here, we have our farm loan programs where we make and guarantee loans to farmers to either promote, build, sustain family farms, whatever we can do to help that farm succeed, with a special emphasis on loans to our beginning farmers and also what we call underserved farmers, which is our minority and female applicants. So as far as FSA loan, there are, of course, eligibility requirements. One thing is for our loans is that you're unable to get financing elsewhere at reasonable rates and terms. You know, we aren't talking about going and putting something on high interest credit cards or anything like that. But that your normal lender maybe says you don't quite meet their qualifications, whether it be for collateral or whatever other reason, that kind of puts you in the FSA's category. But one thing we want to dispel is we do not make customers go and get rejection letters from other lenders. We ask that you come see us first, talk about it, and then we can make that determination. You know, we ask the other banks and farm credits what their standards are, so we can tell most of that by looking at the information that we got in front of us and say FSA would be a better choice for you at that time. So two types of loans that we have. One is our direct loans, where FSA is the one that actually makes and services your loan. So you work with an FSA loan officer. We have approximately 40 of them throughout the state right now. Um, Typically, your rates and terms, the interest rate will be a little bit lower. The terms of the loan, we can go a little longer than maybe a conventional lender would, but it's going to be whatever is going to fit best for your operation. With our direct loans, those funds do come from the U.S. Treasury. It's something that's allocated by Congress every year. And then the different types of loans we will get to in the upcoming slides here. But the other type of loan that we have is our guaranteed loans. And what that is, you continue to work with your local ag lender. They're the ones that make the loan. It comes from their funds. But because you do not quite meet all of their standards, they may ask FSA for a guarantee on that loan. to limit their risk and maybe allow them to make a loan that otherwise they couldn't. So maybe you have a very tight cash flow, but with a guarantee on it, the lender is willing to do it. That way, if there ever does come to be a loss, the lender is not the one. You know, they're out there for a 5 to 10% loss on the remaining balance of the loan, but FSA covers the rest of it. With the guaranteed loans, then you are usually working with the rates and terms of the lender. So a lot of times they will use the FSA guarantee so that they can lock in a lower rate than what they could offer otherwise. Just a little history here, farm loans that we've made here in Wisconsin over the last 10 years. On our direct loans, a total of over 11,000 here. Of course, we haven't made as many in the last couple of years because there are less farmers here in Wisconsin than what we had 10 years ago, less people looking to get into it. But over those 10 years on the direct side, $947 million has been loaned out. On the guarantee side, almost 7,000 loans for $2.6 billion. So you can tell right there, the guaranteed loans are a little bigger than what the direct loans are. So we usually kind of look at direct loans as something that for that beginning farmer or somebody a little smaller operation, and then the guarantees kind of get into the medium-sized operations. Not that they don't work for everyone, but the little bigger amounts that are out there. So currently on our portfolio, that's the loans that we made. We right now have 575 million outstanding on our direct loans, with a delinquency rate of usually about 3 to 4%. So it's pretty good. Most installments are due at the first of the year, so it's always a little higher at that time, but low delinquency and loss rates. And then our direct side, we have over 1.4 billion out there on the guaranteed. So between the two, we just passed $2 billion outstanding here for the amount of loans that we got out there. And that is, Iowa and Wisconsin are the only ones with that kind of volume in the nation. So we do have a pretty good program going there. We have over 3,300 direct loan customers right now and 2,500 guaranteed customers. Some of them actually have both. So between the two, there's about 5,200 different customers. Last year, we did about $350 million direct and guaranteed on the loans, and 70% of our direct loans do go to beginning farmers. So it is really for someone in their just kind of starting their operation or getting it developed. And a beginning farmer is known as less than 10 years experience. We did make some loans to veteran farmers and have actually expanded that a little bit this year. So we're happy to be getting involved with some more veterans. And then just a note there at the bottom, the FO loans are zero subsidy, meaning our loss rates are so low on real estate loans that we make that they actually do not cost the government anything other than some administrative costs. So people pay them back, and the money we get on them plus interest and some guarantee fees actually pay for anything that we actually might lose on the loan. Wisconsin is known as America's dairy land, but it's not just dairy anymore. As you know, we've lost a lot of farms, but it's a pretty diverse state here. Just this shows the different types of operations that we made loans to last year. You can see dairy is still predominantly what we have here, and then beef and cash crops. But I think there's 25 different enterprises listed there for the types of loans that we made. So we've gotten into pretty much any ag enterprise that can generate income and be able to repay their loans. For the types of loans that we got, I'm going to start with the guaranteed loans here, but we have operating type loans, and those are to basically operate your farm. So a line of credit or annual loan for purchasing your seed, fertilizer, feed, those kind of things. And then term operating loans for the equipment and breeding livestock that you would have. So something that is going to last more than that 1 year. And we can also use them term loans to refinance some of that operating debt if we wanted to consolidate it or pay some bills or whatever that might be. And then the farm ownership loans, pretty self-explanatory. It is either to purchase or improve real estate. So on the guarantee side, between the operating and the farm ownership, we have a combined limit of 1,776,000. So that amount is adjusted annually, why it's kind of a different amount. But between the two, you could max out at the $1.7 million there. We also have what's called conservation loans that would work just like a farm ownership loan, but it's if you're doing a specific conservation practice. So if you needed to put in some manure storage or any kind of conservation practice on your fields, or even to buy equipment in order to install those practices, would be something that you could do under a conservation loan. Really not utilized much because most people just stick with the regular operating and real estate loans. And then there's even a land contract program that is not used at all, but it is possible where if someone was selling land on a land contract, they can consider getting a guarantee on it, which would possibly limit their risk if the purchaser did not make their payments. On the direct side, again, we have the farm ownership loans, again, to purchase and improve real estate, but we break that down a little bit. We have a maximum of $600,000 that we can loan on real estate. Currently, our interest rate is 2.625%, kind of the lowest it's ever been. And June is probably going to be the same or lower the way things have gone here. And then we can do a couple different things. So if we're looking at larger purchases, or if we're looking to help somebody get established with another lender, we have participation loans where we really go 50-50 with another lender. And by doing that, it lowers our regular rate to the 2.5%. So normally that direct farm ownership loan is, we would see it maybe around 4%, but it's actually so low right now with the way the economy is going. But a participation loan, we did 50-50 with another lender, you get 2.5% interest rate. And then if you're able to put a minimum of 5% down on a purchase, we can actually lower that rate to 1.5%. So different options that are out there, and we can utilize multiple ones depending on the size of purchase that somebody's looking at. Just an example here, if we did a participation loan on a $600,000 purchase where FSA and the other lender were both putting in the $300,000, we both did 30 years, and I put the lender's rate at 6%. I've actually seen them in the last week at 4 and 4.5, so a lot of variability on those. But just for this example here, you'd be paying about $36,000 a year on those loans for that farm. And then if we went into the down payment program where you had to put the 5% down, so you'd end up with $30,000 in cash into it, that would lower the portion of FSA's loan, but also lower our interest rate and the term of the loan. So overall, you'd be paying about $1,400 a year more by doing that, but you'd actually pay off the FSA loan 10 years quicker. So you save a ton of interest by being able to put a little money down if that's a possibility. On the direct operating side, same purposes as what we can do with a guaranteed operating loan, but there we have a limit of $400,000, so a little bit different than the others. Currently an interest rate of 1.75%. Like I said, that can be used to purchase cattle and equipment, to refinance those types of debt, or some minor real estate improvements. So anything that can be paid off over maybe 7 years instead of stretched out 20 years like a real estate loan. Another thing that comes up when we have certain disasters are emergency loans, to where we can actually help somebody recover from something that they lost. Whether emergency loans come because they have weather-related instances such as drought, flood, tornadoes. So we did a couple loans here last year due to some losses from the tornadoes. So we can pay anything that the insurance doesn't cover, or that the current lender maybe is unable to advance. We cannot do a big expansion with an emergency loan. It's basically to replace what you have. But we can make some improvements. We can't go from a 40 stanchion barn to a 200 cow freestall, but we can make some adjustments there. And then something you don't see everywhere, FSA offers youth loans to those aged 10 to 20. If they are involved in some type of ag organization, such as 4-H or FFA, we can make them a loan up to $5,000 for purchasing income-producing ag-related projects. So the most popular one, of course, is a animal for the fair. So they raise that animal and sell it at the fair and use that money to pay off their loan. Some have purchased, a few dairy cattle to add to the parent's operation, or maybe a piece of equipment, different things like that. But it is a possibility where 10-year-olds can get a loan without somebody else signing for them. So then microloans are something there similar to our farm ownership and farm operating loans, but they're smaller. So a maximum of $50,000 on each. But it's something to help somebody get started, maybe with a new operation, help them. Maybe they're looking at getting into something and don't want to go too big. So we start with a microloan. It's really based on someone starting a lifestyle for them, rather than a full-fledged farming operation, to see if it's something that they want to do. So we've gotten involved in quite a few farmers market type operations, or CSAs, anything that's maybe not going to be too expensive to get started. The farm ownership loan could be used as a down payment on a farm that maybe they're getting the financing elsewhere. So instead of looking at the person's history as far as how they performed on the farm and so forth, we look a little bit more on their character and their credit history. So typically, if we can show that you've paid your other debts, then you're probably going to pay this one off too. A lot of the microloan people it's a side thing along with their non-farm job. But really, what we look at on the microloan is those that don't have a lot of experience. They're looking to just get something started, but we don't want them to go out and get expensive loans with high interest rates and things like that. But just a way to start a new business without going overboard, really. A couple other loans offered through FSA, though not part of the farm loan program. We have farm storage facility loans. Typically, that's like a picture showing there, your grain bin. But it can be used for a lot of different things. So storage of anything that is being raised on the farm, or even some of the equipment used to process and handle that. So a possibility if someone was raising their own beef, maybe they process it on the farm, and we could put in some cold storage for storing that until it's ready for sale. Or using for dairy, it's bulk tanks is something that can be used. If you're harvesting a hay crop, we might purchase the wagon and the tractor or the skid steer to move the bales, different things like that are available for the farm storage facility loans. And then marketing assistance loans are ones that people typically will take out after they harvest the crop and use that loan as their operating money until it's time to sell it. So if you're going to harvest your corn in the fall, the price isn't the best, then you can get a marketing assistance loan and hold that corn until you can get a better price, maybe the following spring. Those are usually 9-month loans, very low interest rates for them and the farm storage facility loans. In fact, I think the FSFL loans right now are below 1% for somebody looking at some of those. So, and we can use them in combination with the other FSA loans. The loan limits do not apply to these. So it's a little bit different as far as how much can be worked in on each. Farm storage facility loans have a limit of 500,000, but it's basically per loan. So you could put up, a big grain facility for 500,000 one year, and you could come back the next year and do the same thing as long as you can show the ability to repay it. So that's kind of the types of loans. And then in order to be eligible for a loan, there's of course certain criteria that you need to make. We make loans to U.S. citizens or those that are legally here with green cards. You have to be of legal capacity and mental capacity, so 18 years old except for that youth loan. If we had loans with you before and you did not pay them back, well, guess what? You can't get another one. No agency loss there. If you're delinquent on federal debt, different things like that, of course, would make you ineligible. If you've been convicted of controlled substance violations or crop insurance violations, some of that stuff, once you solve it, it does make you eligible again. An acceptable credit history is kind of a judgment thing. We do not use credit scores. We typically look at how has this person performed in the past. So that's where we get in with a lot of the beginning farmers maybe don't have much of a credit history. Just starting out, well, that's not something that works against them. We just want to make sure that there's not a lot of derogatory things on your history out there at this point. The test for credit I mentioned before, that if you're unable to get the credit elsewhere, that's when FSA kind of steps in. You need to be the operator of the farm. You cannot purchase a farm and rent it out. You need to be the one actually providing the labor and management. And then as far as that management ability, we do have a consideration of borrower training. So possibility of requiring that a customer would go to some financial management or production classes offered through the tech school or online, something to give them a little bit more experience. Mentioned you have to be the operator or the owner operator if you're buying the farm. But in order to figure that out, we have different things that we look at. Of course, providing the labor and management. Are you making the decisions that are out there on the farm, not just some hired labor? And then our book says it's family size farm, but there's no definition for what's a family size. So we have very small operations, and then you have families that have thousands of cows out there. So that's kind of wide open as far as what's used there. But we do look at is it a farm? So we do not make loans for rural residences or somebody just so they can have a nice place in the country. You have to be actually producing some type of product to generate some income on the farm. And then there are a couple things that are not eligible, such as horses, unless they're being used as draft horses, certain exotic birds and other animals that are not really ag-related. But one thing that is ag-related but is not eligible is custom farming. So we cannot buy equipment for someone to go out and harvest somebody else's crops. You actually need to be the one that's raising the majority of where the equipment is going to be used. So we kind of covered this. The management ability, there's one extra thing in there for real estate loans, that you're required to have 3 years experience before we'll make a farm ownership loan. So originally that was 3 years operating a farm, so you had to actually go and kind of rent a farm first before you could get a real estate loan. Then they relaxed that a little bit and participated in the business operations of a farm, meaning if you had some management duties, even if it wasn't your farm, that could qualify. So if you were a herd manager or made some cropping decisions, we could use that experience. We've changed that a little bit now since the last farm bill, where we can use some other factors to throw in there for somebody's eligibility. So even if you haven't operated that farm yourself, if you've done some of these things, we can use that and count that as 1 year of experience. So if you've got some college courses in ag up to 16 hours, we can use that to to call it 1 year of experience. Some business management experience outside of the farm. So if you've been a manager in some other non-farm business. If you've been in the armed forces and honorably discharged, we count that as a year of experience. And the same as if you were hired labor, but did have some management duties, maybe working for your parents or for a neighbor or anything like that. As long as you helped on the decision making, we can use that as experience. If you've already gone through a VOAG program through the tech school or someplace else, we can use that. Or if you've done any type of internship or farm mentorship program. Just added that if you repaid a youth loan, so if you had a youth loan and were able to pay that back, we're going to count that as a year of experience. We can't use multiple ones to meet multiple years, but at least gets one out of there. And then one other thing that works well, especially with the microloans, if somebody doesn't really have any experience, is we have a mentorship program with SCORE. And if you want some information on them, it's basically score.org. You can look that up on the internet. But they have people there that are willing to help mentor customers. They might not be all ag people, but they're business executives and can maybe help on the financial side and some of that. So a lot of different ways that we can use to help make people eligible for these loans. One thing we do look for when we're starting and meeting with a customer, of course, we have our application packet with a bunch of forms in there, but we really want somebody to give us some information as far as what do they want to do, because if we have an understanding of where you want to go, maybe we can help you get there. So tell us, and this can be very brief, but tell us actually what is your plan, where do you want to end up. We can start out with we want to milk cows or we want to grow crops, but we need to know where's the finish line on this. What products you're going to do and the type of production you're expecting. It'd be great to say, yeah, I want to milk cows and make 30,000 pounds, but there's really not a lot of people out there that can do that. So when we're starting out with somewhere, we're going to use county average or less unless we have some experience. Same with the if you wanted to get into the farmers market stuff or things like that, do you have markets available out there? Do you want to, grow tomatoes? Maybe that market is kind of used up already. So we got to find some other niche or some other place that you're going to go. Maybe you get some contracts with people as far as what you're going to be selling. So a lot of different things that we want to look at when somebody's getting started. That they have some type of idea as far as where they're going, and they've done some a little business planning here with the operation. I mentioned before that our funds do come from Congress, so they are appropriated every year. There do come times in the past where we have run short of money. So I mentioned in 2016, our operating loans and the guaranteed farm ownership loans all kind of ran out. We're on a fiscal year basis, so every October we kind of get new money, but there's possibilities once in a while that people sit and wait a little bit before the funds get approved. So, if you're looking at buying something this fall, now might be a good time to start, or in the next month or two to get things going. A lot of the funds that are allocated, actually 75% of them are targeted to the socially disadvantaged and the beginning farmers. And then as we go through the year, once we get to a certain point, those targets get lifted and they can be used for the non-beginning farmers and non-SDA clients. But we want to make sure that there's funds available to get these people started with their operations. And then, of course, this is the government, so there's paperwork. Yes, we do have several forms, but you can get an application packet where we do ask that you sit and talk with a loan officer beforehand, because there's maybe some of the forms you don't need. So no sense of filling something out, or if you already have it with your other lender or on your spreadsheets and things like that, then we can use that. You don't need to use our forms. But it really is no different than what you're going to find at most other lenders. We've cut out quite a bit of it over the years here, so it's getting better, and hopefully we'll continue that way. And then just a couple plugs here if you want some information on this, and I can make the PowerPoint available. I'll get it to Amanda so they can put it to anybody that's requesting it. But most of this information you can find on fsa.usda.gov, and then just click on farm loans, and it will provide you a lot of information there, including application forms and just kind of summaries of the different loan programs. And then also on farmers.gov, it's kind of the new place for all the FSA information. So you go there, if you click on fund, there's a category there for farm loans, and there's even you can even scroll through and answer a few questions, and then it will tell you what type of loan you're kind of looking for. It will tell them where you're located, and it will take you to the office there that handles that area. So some good information on those sites. And if you're a current farmer too, farmers.gov is really where you should go, especially with the FSA programs out there now for the coronavirus program and everything else. So lots of good information on those sites. And then just my contact information there. I'm available whenever. As mentioned, I'm the farm loan chief, so I kind of have oversight of our program and can try and make things better for what's going on out there. So I answer lots of questions, but I can put you in contact with the loan officer that can help you best. So I'm going to turn it back to Amanda and see if there's any questions.
Perfect. Yeah, I'm going to unmute everyone. And then if anyone has any questions, you can ask those now, or you can type them in the group chat. Either way.
In terms of getting in touch with it later, let me give you a little schedule information. I have something.
Oh, sorry, it looked like there was some background noise. So if you do have a question, why don't you go ahead and type it in the chat. Otherwise, this information again will be posted. There will be a recording of this presentation. And if you have any questions, you can reach out to myself or Tom or Amy or any of us separately. With that, let's see here. We do have a quick poll that we just want to survey everyone. So if you could please just take that poll, that would be really helpful for us to know for future topics and future meetings. Of course, with COVID-19 going on, that would be really helpful.
And I think we have a question in the chat.
Oh, yes. Are there grants available through FSA for assistive technology? That is a good question. Tom, I don't know if you can help answer that or not, but otherwise I can try as well.
Yeah, from what I know, FSA, we do not have any grants. We have our loans, and then we have our farm programs applicable to, the different types of operation, but nothing on the grant side.
All right, thank you. All right. It looks like everyone, I think, has taken the poll as well. I appreciate that. Is there any other questions? All right, I'm going to end the polling. And thank you so much all.